Good morning, good afternoon, good evening, wherever you are listening to me. Thank you so much for joining another episode of Wealth Building Conference. Today, I'm going to be talking about cash flow versus profit. All right. My name is Oludare Fashola. I want to thank everyone that have been joining us across the world. Every Friday and Saturday. I just want to appreciate your time. I really want to thank you so much for joining. Just the usual way of starting the program. Wherever you are joining from, I want you to please type your name and where you are joining from. Okay. We want to meet you. This is not just an ordinary webinar. All right. It's a webinar that is fully packed with practical steps, actionable strategies on how you can actually, balance cash flow and profit. A lot of us are making money, right? But when you are making money, how does it look like when you make money but it doesn't reflect in your bank account? All right, so that is why I'm super excited to talk about this today. All right, whether you are a doctor running a clinic or dentist, surgeon, or you are a business owner growing your business, right? One thing is very certain: making money is not the same as keeping money. If you agree, please put it on the comment chat. I agree. Okay, that making money is not as as the same thing as keeping money, right? So the same as keeping money. And what exactly, why do I actually say this? Because I've seen a lot of medical professionals, business owners, surgeon, dentists. On paper they are profitable, but it doesn't reflect in their bank account. So today we're going to break down the financial mistakes that keep high income professionals cash poor even when their business are profitable. All right. You will discover the real difference between profit on paper and money in your bank account, and how to stop the hidden leaks in your cash flow, and how to structure your finances so your money work for you, not the CRA. Okay. By the end of this masterclass, you'll find a clear roadmap to build financial breathing room, fund your growth goals, and create predictable wealth without stress or guesswork. So grab your notes book, silence your distractions, and get ready to see money in a way you have never seen it before. Once again, welcome to Cash Flow versus Profit, a financial clarity masterclass for business owners, medical professionals, dentists, and surgeons, right? My name is Oludare Fashola, and I want to thank you once again for joining, right? So please, as you are joining me, I want you to please type on the comment chat where you are joining from and your name, where you are joining from and your name. Okay, it is very important. Again, if you know any medical professionals, dentist, surgeon, business owner, right? I want you to please share this link with them. Let it come and learn, right? Because this is a very important topic, and I know a lot of us must have come across this in the past, that companies are making money on paper. They prepare your balance sheet, they prepare your profit and loss. You see profit, but it doesn't reflect in your bank account, right? So you want to know, why is this happening? What are the mistakes, and how can you block these mistakes? And whatever we learn here today, please try as much as possible to implement it. There's no point coming to a webinar, right? You listen, but you don't implement. Okay, please, whatever we discuss here today, let's try as much as possible to implement. So I'm going to pull up my slide and we're going to the presentation. So cash flow versus profit, okay, a financial clarity masterclass for medical professionals and business owners. Right now, why so many earners still feel broke? Now, you might be wondering, like, why do I have to actually come up with this topic? Because why? In the course of my business, in the course of meeting business owners, medical professionals, I do analyze their balance sheet. And one thing that is really worrisome is they are profitable on paper, but it doesn't really reflect on their bank account. A lot of them are struggling financially. So we want to break down the myths that surround that. What are the things that is actually missing? Why are they rich on paper, but they are not cash flow? There's a difference between profit and cash flow, right? You might be profitable, but you're still struggling with cash flow. So like you don't have money to, to meet some expected obligations. So number one, you make money, yet the bank balance doesn't show it. Like, one thing that is very important, you as a business owner, you as a medical professional, surgeon, dentist, you need to understand is that if you make money, how often do you see this money in your bank account, right? Again, if your expenses rises as income rises, there's a very serious danger. Like anytime your income rises, you know, expenses rises to match up the expenses. This is not a financial, this is not a very good financial planning, right? You are growing your business, but cash feel tight, right? You are going to a clinic on daily basis, you're making money, but yet you still feel like something is missing. Then need to sit down and listen to this webinar today. So please take note. And whatever we're trying to share today, right? Actionable strategy steps, I want you to please implement it. Again, you are profitable on paper, but broke in reality. When there was a particular time I met a medical professionals and I actually, reviewed the profit and loss. And it actually shows the profit and loss statement. This particular individual has a lot of profit, but it doesn't really reflect in the bank account, and is complaining like, I'm making money but I'm struggling financially right now. So there's difference between profit and cash flow. So profit is what accountants show you after expenses on paper. When you prepare your financial report, all right, they prepare your income, your money that comes into your operations, like you make money from your daily practice, okay, and less whatever expenses you pay yourself salary, take some dividend, pay salary, pay gas, insurance, other expenses, whatever you actually account for depreciation of your asset, whatever that is left is what we call profit. Okay, now what cash flow is what actually in your account to spend right now. So it doesn't really matter. Okay, if you like, you can make $1 million profit. If you don't have cash flow to back it up, something is wrong. So profit is not equal cash flow. Everybody put it in the comment section. Profit is not equal to cash flow. You might be profitable, but you don't have cash to support that. You can be profitable and still run out of cash, and that's how businesses collapse silently. So if you find yourself in this category, like, you are making so much money, but you have nothing to show for it, like, your bank's balances doesn't reflect what you are making. You see profit in your income statement, but it doesn't reflect on your paper. Then you need to begin to check your businesses. Otherwise, that business is the going concern is seriously being threatening. All right, now let's look at the doctor, surgeon, family physicians dilemma. How this look like in real life now. So let's say, for example, a doctor bills 600,000 a year with strong revenue. This is a very, very strong revenue, right? So after payroll, rent, taxes, there's profit on the books. Of course, they prepare your books of account, right? Your gross earning minus whatever expenses. Of course, it shows on paper that, oh, this company is profitable, right? You go to the bank, oh, you're profitable. Okay, and that's what the bank will look like, even if they want to give you whatever facilities. What they will request for is, let's have your financial report. Let's analyze your financial report to review your financial report. If you are profitable, then it probably might be good for some of finances and all of that. But receivables and delay eat up the cash. What do I mean by receivable? Like for you as a business owner, medical professional, surgeon, dentist, right? Receivable means that whatever you are renting some services, like, and people are not paying as at when due, right? Let's say like people are owing you. Okay, that's what we call receivable. And every businesses do incur that. It happens. Okay, but so if your receivable, especially the times of remitting the money, is too long, it's taking so much long, like you don't match up the revenue with the expenses, because when you treat your patient, when you render services, okay, there is a correspondent expenses that follow that, right? For example, you render services today, okay, and you pay salary, you pay gas, but the money is coming in immediately. That's a very big problem, and that is why you are making money on paper, but in your bank account it doesn't show. That a lot of people will have a lot of money on receivables, and it becomes a problem. So when you have this, there's a very, very big problem, and you need to quickly look into you need to audit your finances. Now, the clinic looks successful, and receivables are good, but the owner's cash flow is negative. So now you have a lot of money in the receivable, you are rendering services, you're making money, but the cash flow is negative. And when we are talking about cash flow, right? Every month, everybody must have what you call a cash flow. That is your income less expenses, the net income. If you don't check that every month to know whether I am profitable, whether I'm just running services, but I don't have anything to show for it on paper, I'm very rich. My my financial report is very good. They look at your balance sheet, fantastic. Your cash flow statement, very fantastic. Income and expense statement, very fantastic. But you are cash poor. That's a very big problem. That's a very, very big problem. And I want you to please understand this today, that many of us, right, a lot of businesses have collapsed because of all this. And that's what I'm actually coming on with this topic, that look, don't be cash on paper, rich on paper, but cash poor. Like many businesses, they rich on paper, but cash poor. And that silently, that business is going to collapse, right? So the entrepreneur struggle. So the same problem, different industry. So business owners reinvested everything back into growth. Now, when you make money, it is very good to expand. But when you are reinvesting, okay, you need to make room for some exigencies. Businesses can take unexpected dive, right? And when you make money, right, you must also make provisions for cash flow, okay? Because if the cash is not flowing, it might be very difficult for you to expand. So when you want to reinvest, did you check your bank statement to know that this money I want to reinvest, do I really have it in my bank balances? Because more often than not, right, when businesses make money and you want to reinvest back into the growth of the company, you have to check, how much am I reinvesting? Does this really reflect on the growth of the company? New equipment, staff, or ads are all paid before cash comes in. So when you are counting your egg before it hatch, this is an example of what you're saying. A lot of us, right, you have not realized the profit, and you start paying staff salary, you start paying ad, start paying other expenses before you actually look into what you really want to pay. Like a business will only succeed when you are matching up your expenses with revenue. So, and that is the important of also analyze what the cash flow statement. So the cash flow statement is one of the very important aspects of financial report, because why? It will really show you which businesses are really doing well, which one are not doing well. Like, for example, a clinic might be running, you might have maybe pharmaceutical stores that is also, that is also corresponding to the clinic, you're running the two together. If you have not really sit down to look at which one is really bringing more money, right, to know which area do I need to focus more and expand, Okay, I'm going to give you an example of somebody who is selling bread and egg. Okay, bread and egg. Let's say you have a company selling bread and egg. Now, chances that some people might come and ask for bread. Some people might ask for egg, right? And some people can buy bread and egg. But the cash flow statement will reflect if bread is the one making more money or egg that is making more money. What is that trying to tell you is that you need to look at the operating income, the income minus operating expenses. So you need to correspond that. You need to equate that. All right. If it is the bread that is giving me more money, okay, and you are focusing, you are spending more on egg, that's a very big problem. That is where problems comes in. This is how you can actually experience or fall into the trap of profit on paper, not in the bank account. Because why? The business that is giving you more money, okay, you are not really putting money on it. The one that is not producing income is what you are focusing on. Those are the things that can cause you to have money on paper but not reflect on your bank account. Timing mismatch. Profit margin looks good, but the bill comes faster than payment. Now, when you are in a business, okay, that's what we call matching concept. Okay, as at when due, right, you must be able to account for every month. How much income do I make this month? How much expenses do I pay this month? Right. So if you are carrying over one expenses of one month to another month and you are not able to really look into, oh, this month I didn't do really well. Last month I really, the business really flow. You might not be able to really track your expenses, and this might actually lead to serious making money on paper but in bank account making money. Are you managing money or you are just earning it? I want you to ask yourself this question. Okay, do I know my monthly burn rate? Now, if you don't take cognizance of what your monthly expenses look like in a month, there is no way you can run a successful, profitable businesses that will be on paper and it will also back up with cash flow. Right? How many months of cash reserve do I have? Now, business can take unexpected dive at any time. Do you have emergency? You are struggling, it does not really reflect you are profitable on paper, but you don't in cash flow, you don't have money to back it up. So what if there is a cash squeeze, like the company just experienced a little bit of shake and you're unable to provide cushion? So you need to ask yourself all these questions. Do I have enough cash reserve? All right. Can I survive 60 days with zero new income? You need to ask yourself these three tests as a business owner, as a medical professionals. Honestly speaking, many of us, some businesses have silently died as a result of the fact that they don't take note of all these little tips. And that is why we are coming out to say, hey, let us educate you business owners, medical professionals on how you can really, really manage your clinic, how you can run a successful clinic. Some of you, it might be as when you are trying to expand or you want to have your own clinic, you started spending money and it actually leads to overtraining. Like, you incur a lot of money on expanding, and at the end of the day, you open a clinic, you don't have enough patients, and the expenses, right? The income cannot take up the expenses. That is a very good way to look at. So you are profitable on paper, but not in bank account. So this is the cash flow formula that I want everybody to take note. And it's also applicable to even if you don't have a clinic, right? So let's look at the three cash flow formulas. Okay, we call it the three cash flow levers. Inflow. Your inflow is revenue plus financing plus investment. So inflow means whatever that is coming to the companies, right? You make money, right? Your revenue. plus whatever. Let's say you have other investment, maybe real estate, maybe you put money on stocks, bonds, read, could be anything, could be anything. And you also have some form of investment here and there. That is what we call, those are the money coming in into your business. So don't forget that when you are doing this, when your revenue comes in, all right, you as a business owners or medical professionals, surgeon, dentist, you can actually use your holding company to house all these activities, like your financing activities, your investment activities. You put it on your holding company because you are not allowed to have anything outside your medical corporations by law. Okay. Outflow is your expenses plus tax plus debt plus lifestyle. This is one thing that is really, really affecting you a lot as a medical professional. Lifestyle creep. Once your income increases, you increases everything. Like, it's okay, but before you increases your lifestyle, but ask yourself question: will my income be able to sustain what I am, what I'm doing right now? If not, then how can I really live within my means, like, my income? I need to know, if anything happen, will I be able to maintain this lifestyle, right? Again, taxes. Oh my goodness, taxes is another bigger problem that you need to take note of. All right, tax is one of the number one biggest destroyers of what? Debt. Debt kill businesses very, very, very fast. There is nothing wrong in taking debt. Like, if you want to take debt, sit down with your accountant, look at do a proper appraisals of whatever you want to go into. If it is a business, is this business profitable, right? What is the payback period of this business that I want to go into, right? Is this something that is going to sustain itself? Will I be putting more money into it? Okay, so because there's no point you start a business and you are still using your clinic money to finance that business. It's not business wise, right? So ask yourself this question when you are doing your appraisal, when you are appraising that business, when you are appraising that investment, right? Ask yourself, can this business sustain itself, right? If there is any, if will I put money into it in case anything happen in future? Because you never know, right? So, but, and again, what is the payback period? If I put $100,000 into this business, I put $1 million into this business, how many years will it take me to recoup the money back, right? And what is the tax implication of the businesses I want to go into? All these little things. A lot of us, we don't take note of this, but we just rush into the business, and at the end of the day, we don't make anything out of it, and we lose money, we lose capital, we lose everything, and the person starts struggling. So we need to take note of all of this, right? What you keep and invest strategically is retention. So what means is that at the end of the day, okay, you should be able to retain some amount. All right. So what you keep and invest strategy, what you call retention. So this is the cash flow, the three cash flow formula. So when your inflow is actually lower than is greater. Your inflow is your inflow is actually less than your outflow, then there's a problem. You are making money, but what is going out is more than what you are making. That is a debt trap. You need to take note of that, because when you make money, right, what is going out, if it is more than what you are making, you are sucking that business. That the chances is that the business is heading to collapse, right? When inflow is actually greater than the outflow, then there's a wealth creation. So when you make more than what you spend, right, that is what will make your business to be profitable, both on paper and cash flow. And every business is, regardless of what you are doing, your balance sheet might look very good, your cash flow statement might look very good, your income statement might look very good. If you don't have cash flow to support it, it's a problem, right? So why cash flow vanish unexpectedly? Why? Number one, tax deed before receivable comes in. Now, when you are in a business, especially that actually deal with a lot of receivable, okay, as the money, don't allow the receivable to take so much time before you actually record it from your client, right? So because why? When there are some certain expenses that you must account for as you are going, as you're growing your business, as you are planning your finances, I will encourage you every time, every month, set aside some portion of your money for taxes, right? So, and this will actually help you when you are doing that. It will also help you to check receivables, like, all these receivables, do I actually have cash to back it up, or is it matching my trading activities or what I'm doing? Okay. Loan repayment misaligned with income cycle, right? You are taking loan, and sometimes you are not really looking at the cycle of the loan. Like, you take a loan for 12 months, right? And you're supposed to be paying your principal and interest, and you don't follow that pattern. You don't really follow the flow. It's a very big problem. It will actually lead to profit on paper, cash flow poor. Okay, spending faster than collection arrive. Like, before you even get that money, you've already spent a lot of money, right? That's what happened to a lot of businesses today, right? Before you spend, right, any money you want to spend, ask yourself, do I have this money in my bank account? Okay. Not separating businesses and personal expenses. This is a very, very big problem, again, that we don't take note of, right? If you don't separate your business account from your personal account, you are missing everything together. Your account will be very cumbersome, and at the end of the day, you'll not be able to track what you spend for business and what you spend for personal account, right? So how to fix this? I'm going to give you 3 ways to fix this. Number 1, create a cash flow system. Number 1, all any flow here first. So before you do anything, you must have a different type of account, income account, where all your earning comes in. So you also need to have operating account for business expense and daily operations. So this operating account is the account that will take care of all the expenses, all the operating all the operating expenses to run your business. Okay. Now, you also need to have a profit account. That is for strategic reinvestment and growth. For you as a business owner, I will encourage you, okay, all income account, operating account, profit account. So when you have profit account, this one is for strategic investment and growth. You actually can use your holding company to do that. Tax account, every month, make sure at least 15 to 25% set aside for monthly tax obligations, because at the end of the year, right, it may become a very big problem if you don't take care of tax, especially when you are making so much money. So at the end of the year, you now realize that, oh, I've made so much money, right, and I need to pay the tax. And if you don't do that, CRA is really crazy. You don't want to fall into their problem. You don't want them to garnish your account. You don't want to close your clinic. So these are some of the things you need to really take care of, right? And again, for saving, insurance, and investment, you need to also have an account for every form of investments, your stocks, bonds, insurance, real estate, whatever investment you want to have. You also need to have freedom account, right? Number 2, protect and leverage your profits. Build liquidity using real estate and cash value life insurance for accessible reserve. Like, it might not limited to this alone. There are so many investment opportunities that you can actually leverage on. When you are making money, be smart enough to make sure that you need to diversify your portfolio, right? I mean, have you seen that the reason why you want to do this, that you don't want to put your egg in one basket, right? You don't want to shot yourself in the leg, right? So make sure you diversify into different profitable investments, so that at least, but before you do that, you must have run the business successfully to ensure that at least this business can really run itself. Because if you don't focus on that, and you just divert to another business, it will distract you. And because you have not really built the business to a level where it can withstand any form of financial shock, you put yourself into that problem. So make sure that before you do that, make sure you grow the business to a level where it can withstand any form of financial shock before you diversify into another account. Tax-free assets, assess fund for expansion without triggering tax or penalty. So this is the power of cash value life insurance. Put your money in an investment vehicle that, strategies in which you don't need to, it's not going to trigger taxes. Okay, like, you make sure that your money grow tax deferred. You can access your money tax free. It's also pass your generations tax free. Straight to collateral. Turn idle profit into collateral for future growth or emergency. So again, right, there are some strategies that you can actually build up, and you borrow your money against, like you're borrowing against your money. If you have a very profitable companies and you set up a strategic investment tool that will allow you to have access to your money instead of paying tax of about 30-40%, or maybe paying tax on your retain earning of up to 50 or 53%, you can actually put up some strategies in which you can turn your idle cash into profitable, into collateral for future growth and emergency. So, like for example, you set up a life insurance policy, you can borrow against this at a very negligible interest rate of 3%, 4%, depends on the carrier, depending on the provider. So, okay, protected growth, right? Grow capital safely while maintaining comprehensive protection. So you can actually see that this will also help you to grow your capital without you, triggering any form of, taxable disposition. Number 3, track, measure, and review monthly. So use QuickBooks or Waves to track inflow and outflow automatically. Like, when you are in a business, right? What if you don't track what you don't track, you cannot measure it. What you don't measure, you cannot really gauge. Like, okay, am I doing well? Am I doing well? Am I not doing well? You need to ask yourself that, and you can use various software. Your accountant can actually give you all of this. QuickBooks is very, very good. I use QuickBooks. It's very, very good to track, to monitor your inflow and outflow. There are some certain things that your accountant will not do for you. I've been saying this over and over, that your accountant cannot help you to grow well. They can help you to prepare your books. Your accountant cannot tell you that you need to be how you can be cash flow, right? How you can make sure that you have consistent money in your bank account. Well, his own duty is to prepare your books. If you have any audit from CRA, he will help you to take care of that. But it is your duty to sit down and say, hey, I'm over trading. Like, there's some loopholes I need to. Some of us we are even so relaxed to the extent that you cannot even review your bank statement. Like, okay, what are the expenses that are going out of my bank statement? Take note and check. Sometimes you might realize that banks are actually charging you. They are taking money from your bank account without your knowledge. And these are things that you can contest. Your accountant will not help you to do all of these. Are little things that is eating your money, that is actually making you to be cash profit on paper, but cash poor, right? Monthly review cash reserve monthly to stay ahead of problems. So, every businesses must have at least reserve. When I used to work in a bank, there's what called reserve, and every company also have the reserve. So you need to review your cash reserve every time. Like, do I have enough cash in case of financial shock? Do I have enough cash in case business take unexpected dive? One else unexpected dive in a business sometimes consume some business owners, and that's the end of it, right? So you want to make sure that you don't want to put yourself into that kind of a situation, so that you stay ahead of any problem that you might foresee, right? So pay yourself strategically, not emotionally or inconsistently. Now, when you are in a business, right, especially if you're a business owner, right, if you want to pay yourself salary, make sure you do it in a realistic way. Like, if you're paying yourself salary, remit the tax at the end of the month. Make sure you remit everything, all the remittances. Please try as much as possible. As you are paying yourself, have enough cash to back it up, because you don't want to put yourself in a problem where you don't remit, and that will continue to accrue interest and all of that. So don't do this with emotions. So some of us take financial decisions on emotions, and it leads to a lot of problem. So you don't need to take emotional financial decision. What you are not capable, if you cannot do something, please be very clear. I can't do this. I cannot afford this, right? If they are proposing some businesses to you and you feel that this is not the right time for me to go into it, Don't take that financial decision. It can wreck, it can actually consume that business. One small mistakes can consume what you have built for many, many years. And you don't want to put yourself into that kind of a situation. Please and please, for God's sake, right? I'm saying this and I'm repeating it. Before you go into a business, do your proper appraisal. Please do your proper appraisal. Check the payback period. Look at the business. Is it going to be profitable? Like, can I really sustain this in the long run? These are some of the questions we don't, and these are some of the emotional, because it's your friend, they ask you to come and do one business, and you say, okay, let's all of us, okay, we just come together, and you go into the, without proper doing your appraisal, it's a problem. It's gonna give a lot of problem, right? And again, audit recurring expenses quarterly to eliminate waste, right? Make sure every quarter, okay, sit down with your accountant, or if you don't have, if you can do it yourself, okay, make sure you review your financial report. Oh, accountant, can you please send me the financial report? I want to see my profit and loss. You begin to see, okay, salary $20,000. Oh, Uber Eats 5,000. Oh, so this month you have eat $5,000 Uber Eats. Oh, no. This one cannot continue. And you see, okay, insurance. Oh, why is it that my insurance just go up like this? These are some of the things you don't take notes, right? Because why? Because you don't sit down to review all of this. You don't know that you're spending so much money. Subscription. Some of us don't know, right? You pay money on Netflix, you pay this, you pay that, and at the end of it, you just subscription. $2,000. What am I subscribing for? What accountant? What is those are the things that let me see all this. Oh, this has to be stopped. This has to be stopped. This is how to build wealth. You don't know, right? All those small things, right? $2, $10, $5 monthly. It becomes a lot of money over time. So when you sit down and we review all of this, it will help you to block a lot of leakages where the money is actually going out. Because why? When the money is going out, those leakages, because you don't take note of that, because you don't feel that it's a lot of money, right? You feel that next level of $20 per month. Multiply that by 12, you see that it's a lot of money plus tax. All right. So don't just make money, all right? Let me tell you this, right? Cash flow is king, right? Please, if you agree, type I agree. Cash flow is king. Profit is just scoreboard. Cash flow determines survival. No matter how profitable you may be on the paper, cash flow is the king. If you prepare your financial report and you don't have enough money to back it up, you're just as as good as you are just running a business on paper, right? Please make sure you do this very, very well. Cash flow is king, right? Okay. Create automated systems that work for you. Like, you can actually do this, right? You have a lot of software like QuickBooks, like all this software will actually help you to check your financial report at a glance, right? What is actually making you, what is causing the leak in your business, right? Don't leave everything to your accountant. I'm talking to you right now as a business owner, right? Surgeon, dentist. Don't leave everything to your accountant. Sit down. I know you are very busy. I know you are working so hard. An average medical professionals, surgeon, dentists, they are workaholic. But at the same time, you don't want to work so hard. Excuse me. You don't want to work so hard, and at the end of the day, you still don't. You are cash poor, right? That is not a good financial decision. Protect your retained earnings strategically, right? Let me give you an example of this, right? As a business owner, okay, you make money, right? Let's say, for example, you make $300,000 in a year, right? You pay yourself salary. Let's say you pay $50,000 salary. That 50K you pay, you already pay tax of 40% on that, right? Of course, you claim that from your total gross revenue, okay? So minus whatever you claim at the end of the day, your expenses, everything. Do you know that you still account, let's say you pay 12% on the tax for corporation, your retained earning again could be subjected to about 50 to 53% taxes. So how do you manage all of this? So Canada is not a country that when it comes to taxes, you need to sit down and say, how can I manage my tax in such a way that I will take a lot of money home? I will have enough money in my bank account. Make your money works, not vanish into the thin air, right? Thank you so much for listening to this amazing presentation. I want to thank everyone that joined today. Uh, it's really like, an eye opener for so many business professionals. If you don't have them here today, you can share the link with them to go and watch the videos on YouTube, on Facebook, on LinkedIn, or Instagram. No, on Facebook, LinkedIn, and YouTube. Okay, so that they will understand how they can actually protect that link, how they can be profit on paper, as well as also have enough cash flow. So if you have any question, you can please put it on the comment section so that we can quickly go through it. Any question, please? Any question? Any question? So if you're a medical professional or um, surgeon, dentist, and you need guidance, you are on paper you are profitable, but on cash flow you don't have enough money to show for it, you can book a free strategy call with me. I'm going to show you how we help other medical professionals to balance the both, like they are profitable on paper and they also have cash flow to back it up. All right, so it is very important. And again, it is also important. Financial intelligence is very, very important. Like, we don't they don't teach us money in school, right? So you have to sit down and learn how money works. So on behalf of Wealth Building Conference, I want to thank everyone that's joined today, right? And I will see you next week. Friday is another time where we're going to learn about how insurance agents can scale. On Saturday as well, we'll be talking about medical professionals and how they can build wealth in a tax efficient way, right? My name is Oludare Fashola. See you next week and bye for now.